Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today, we're diving into a Form 8K filing, a kind of oops, we need to tell the SEC something important ASAP document. And trust me, with the words bankruptcy court and loan involved, it's bound to be interesting. Is it a sinking ship or a clever chess move? Let's find out. This report is dated March 6, 2025, so this is when the event happened. It's an important date because it tells us when the clock started ticking. The main headline here is under item 8.01, which is basically a catch-all for other important events. This section is about a company called Gulf Island Fabrication, or GIFI for short, getting involved in something with EN Global Corporation. Okay, here's the deal. GIFI is entering into a debtors in possession credit agreement, or DIP credit agreement, with EN Global Corporation, which is in trouble. When a company is going through bankruptcy, in this case it is a Chapter 11 bankruptcy, they can get what is called a DIP loan. This loan helps them keep the lights on while they figure out how to reorganize and pay off their debts. Think of it as a lifeline. So EN Global filed for Chapter 11 bankruptcy on March 4, 2025. Chapter 11 is a type of bankruptcy where a company can reorganize its debts while continuing to operate. It's not a fire sale, but more like a financial restructuring. GIFI is lending up to $2.1 million to EN Global. The loan has interest at 12% per year, a default rate of 4% per year if EN Global fails to pay, and is secured by all of EN Global's assets. It's a senior secured loan, meaning GIFI gets paid back first if EN Global goes belly up, and it has a super priority, meaning even before any other secured debts. That means GIFI is first in line. The agreement includes an earlier $400,000 loan GIFI already gave EN Global, called a bridge loan, that will now be included into this larger DIP loan. So the total amount is actually $2.5 million. These funds will be used for EN Global's expenses as approved by GIFI. Basically, GIFI gets to say how the money is spent. The DIP loans mature or become due 6 months after the petition date. This means EN Global has roughly 6 months to get their act together, find a buyer, reorganize, or something else before GIFI comes asking for their money back, but GIFI has the right to speed it up if something goes wrong. The DIP credit agreement has certain events of default. EN Global has to meet certain milestones, like selling their assets by certain deadlines. If they don't, GIFI can call in the loan. This is a pretty standard protection for the lender, GIFI in this case. Now it gets interesting. GIFI is considering buying EN Global's core business, which includes its automation, government, and engineering services. Think of it as EN Global's most valuable parts. This acquisition could strengthen GIFI's portfolio. GIFI can use what's called a credit bid. This means instead of paying cash for EN Global's assets, GIFI can reduce the purchase price by the amount EN Global owes them. GIFI can use the $2.5 million EN Global already owes as credit toward buying its core business. So what's the story here? Basically, EN Global is in financial trouble, and GIFI is acting like a lender and also is considering buying some of EN Global's assets. It looks like GIFI is trying to pick up some valuable assets on the cheap while helping EN Global out of a tough situation, while ensuring they are the first to get paid. Looking at GIFI, they're making a calculated move. They're taking on some risk with the DIP loan, but they're also positioning themselves to potentially acquire some valuable assets at a discount. It's a potentially smart play, but it depends on how well EN Global's core business performs and whether GIFI can successfully integrate it. The major risk here is EN Global's bankruptcy. If EN Global can't turn things around, GIFI might not get paid back in full. Also, integrating a distressed company is never easy. It could be a distraction for GIFI's management and hurt their own operations. In conclusion, GIFI's move is a mix of risk and opportunity. The DIP loan is a lifeline for EN Global, but it also gives GIFI a first look at their assets. If GIFI can successfully acquire EN Global's core business, it could be a win-win situation. If not, they might end up with a loss on the loan. Thanks for watching. If you enjoyed this breakdown, please like, comment, and subscribe for more corporate decoding. See you next time.